Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsp@kaizencpas.com. I'm your host, Mike Michalowicz. Now let's get started. Welcome to another episode of Kaizen Time. I'm joined by Eric Jorn, a partner here at the firm. And aren't you a profit first? What's the term?
Profit first professional.
What does that mean?
What does that mean? So, actually, profit first, in my opinion, first of all, we'll start with the book, Profit First by Mike Michalowicz. Mm-hmm. They created a training and certification program for advisors to learn how to implement the profit first methodology into business owners' businesses. Mm-hmm. So I had to get some education from them and pass some tests, but they also put us to work. And this is where we get all sorts of certifications. We go through all sorts of continuing education. A lot of it is watch a video, take a test, watch a video, take a test. Great, right?
Quick question, by we, you don't just mean CPAs. This is, anyone could take this, right?
Correct. Yep.
Okay.
Yep. But it's easy enough. You just go pass a test and now you're certified, or now you've done this. Yeah. But it doesn't really require you to apply the knowledge that you learned. Well, in this, they actually require you to implement the profit first methodology in your own business and submit the results from that, as well as take some beta test clients and also implement it on their business. And that's where I think that certification is really different, because they force you to apply and actually test the theory, especially on yourself, right? And you don't learn anything better than your own experience in which you've gone through as an advisor.
So they don't give you that certification until you basically submit and say, I did this, all this actual field work.
Yeah, like you actually submit the results. So you do the profit assessments, you do your tracking, your rollout plan, your target allocation percentages, current allocation percentages, et cetera. I don't want to dig too far into the details, but it's a rigorous program. It's not just writing a check and now you got a badge of honor, which is a lot of programs, right? We call it the pay to play programs. But
so let's get into this. What is Profit First then?
Yeah, so Profit First, again, we got the book right here, written by Mike Michalowicz. It is here's the funny part. Accountants hate Profit First. It's so weird.
That does not sound like something an accountant would hate, though.
Yeah, so accountants hate it because they look at it as first of all, they look at it as an accounting method. And they're like, well, that's wrong. That's different than what I've been taught. That's different than everything I've been tested on in the CPA exam, what I went through in education throughout my whole experience. Mike Michalowicz actually says the true accounting equation should be revenue minus profit equals expenses. So the concept there is to actually put your profit first ahead of your expenses.
As opposed to what is everyone else doing?
Is revenue minus expenses equals profit. So that puts profit last, right? That makes it a secondary thing. Hey, I got to go pay all my bills first, and whatever's left over, that's profit. He says, no, we're going to say, I'm going to make X amount of profit. Here's the revenue I'm generating. Whatever I have left over is what I can afford to run my business on.
Interesting. Okay.
So most accountants hate it because, again, it goes against everything you said. And then if they're doing bookkeeping services, you're adding a bunch more bank accounts.
What do you mean bunch more bank accounts?
So Profit First has 5 foundational bank accounts. You have an income account where all your deposits come in. So any income sources you have gets deposited in this account. You don't pay bills.
Customer writes a check. That's the account,
right into that account. Your POS and your credit card processor, they all get deposited into that account. Now, from that account, you distribute the money to 4 other accounts, which are all based on a percentage in which you calculate. So we want to start with profit, right? How much money do you want to make out of every dollar that you sell?
Okay.
So we have our profit. Very important, right? We're in business to make profit at the end of the day. Profit does wonderful things for business owners, does wonderful things for the business itself, does good things for the employees, the community, and their customers. The second one is owner's comp. So owner's comp account is, how do I pay myself? How do I compensate myself? And that could be just what I take in as a salary, maybe my profit distributions that I need to survive and pay my bills. And maybe there's some fringe benefits as an owner that I pay through the business, cell phone, vehicle, things like that, that really, really their ownership expenses. And we might put that in that account. And why we make the owner's comp account second is if you don't have a healthy financial picture at home, if things are not good financially at home, you start making some bad decisions in your day-to-day business. So we need to prioritize making sure that you can pay your personal bills.
I mean, we've brought it up before. When you are making decisions in a pinch, they're not good decisions.
Exactly.
Right? Okay.
Next account we prioritize is the tax account. Obviously, if you don't pay your taxes, eventually you're going to go to jail.
That's rumor on the street.
It's hard to run a business from jail.
Yeah.
No, taxes really aren't that scary, but if you don't pay your taxes, good chance they're going to shut down your business at some point in time. And then no point to have a business if you don't pay your taxes.
Right. Okay.
And finally, the last account is our OPEX account, or operating expense account. And this is where all the rest of the money lives that we pay our bills to run our business from. Now with those five, so again, your income account acts as a serving tray, right? All the food comes out on there, and we're portioning out each individual category's budget, essentially.
All right.
Maybe for some listeners, you might remember the envelope method. Maybe you or your parents used to take their paycheck, go get it cashed, right? You got so much in money from your paycheck. Usually they give it to you in an envelope, right? But you'd take that home and you'd have maybe 5 other envelopes, right? We're going to put some money away for my mortgage, for my insurance, for my vehicle payment, for what meals, groceries, whatever it may be. You have all these categories. It's going in those envelopes. And guess what? When you ran out of money out of one of those envelopes, you didn't just keep spending more, right? Nope. You had to figure out how to survive on that money that you have in that account. And there is the very basic premise of profit first.
Oh, that's wild. I really like that it's broken down, right? But now let's kind of loop back to why other CPAs hate it. So they just don't like looking at extra bank accounts?
Well, more transactions. They're like, hey, this is so unnecessary. This is a bunch of extra work. It's dumb to have all these accounts. It's a waste of time. But I don't know about any other tax practitioners out there. Nothing's worse than going to a client and saying, hey, it's time to pay that tax bill that we talked about all year. You got your checkbook available? And they say, I don't have any money. How am I supposed to pay that tax bill? And
so basically what you're saying, by doing this, you're at least aware, and funds are allocated for specific things.
Not just allocated, you have it in a bank account, right? Comes to the end, if we are following our allocations that we set, you never have to worry about taxes again. They're just paid. You put the money away, and we take the money out of the account and pay the taxes, right? All of a sudden, that friction around taxes goes away.
So let's talk about putting this in action. So you're saying we do this with our clients all the time, right? Is it one of the first things? It's something that gets set up when they become clients? Is something talk to me about the process of kind of implementing this.
Yeah. So you can do it. It depends on where you're at. Okay. We don't bring this up to every client because it's really complicated and they really have to be invested in it. So generally,
so you're talking about someone that's a little bit bigger, more advanced. So yeah, like a solopreneur wouldn't be doing.
We'd say step one before we're going to do anything, go read the book.
Okay.
This is horrible.
Cheap
this
in
is
comparison.
This is not an advertisement. We do not get anything from Profit First. The show is not sponsored, but read the book first. Read the book. If you want to do this, read the book. Understand the concepts. If you read it and you don't understand it, read it again. You have to understand the concepts. Otherwise, you are going to be lost in this process.
So step one, take the cheap route and get a book.
Yeah.
Read it and see if it's something.
Buy a $20 book and learn from this instead of paying us $100 to teach you very simple concepts that are inside of this book.
And so if they are applicable, they kind of jive with what you're doing with your business, or you feel comfortable.
Yeah. So read the book. If you're all in, right, step one, you're going to go to the bank, open up the bank accounts. Mm-hmm. We have those bank accounts established, and we're going to have a discussion around some total needs of the business, right? There's 5 core accounts. There's other things too, right? I might want to acquire another business. We're going to allocate some money into that. So we might have our acquisition account. We might have some big major planned renovations, repairs, equipment purchases, right? We might have a CapEx account, capital expenditures. Hey, we might want to do profit sharing at the end of the year, right? We do a yearly bonus for our employees, quarterly bonus, whatever it may be. Well, guess what? It's really nice to have that bonus account and have the cash in that account for when it's time to go.
To actually do it.
Exactly. So you might actually open even more accounts other than just those 5 foundational accounts. Now go to your bank. And here's the thing is people might say, oh my God, I'm going to pay a lot of fees for all these bank accounts. Then you got to look at your banker, have a conversation with them and say, hey, I'm literally creating a system where I'm going to store more money at your bank. If I store more money at your bank, you're able to then go turn around and lend that money out and make spread. That's how banks make money.
Yep.
So if I'm keeping more money at your bank, my goal with this system is to put more money into your hands to go make more money. Please don't charge me fees to do that, because there are plenty of banks waiting in line that will happily execute this process for no extra cost than a standard banking relationship.
It's a great conversation to have. It's a good position to be in.
It's a great position to be in. Exactly. So that's right. Get those accounts set up. Then we're going to do something called a profit assessment. So this is an issue when clients come to us, brand new clients off the street, they come to us. Mm-hmm. We need to do what's called a profit assessment, where we're going to go back ideally 3 years. Sometimes we deal with what we have available. Ideally we can go back 3 years and figure out, where did I spend my money in the last 3 years, right? Where did it go from, what amount went to profit? What amount went to owner's comp? What amount went to operating expenses, taxes? So that way we know where your current allocation percentages are. How do you currently allocate your money? But now when new clients come in the door and we don't have good books, well, step one, I actually did not open bank accounts. Step one is we need good books, because we need good information to make the system work. So if you have bad books, you cannot implement the system in full. Now, what you can do is you can open up a savings account and transfer X amount of money that's being deposited in your account, 1%, 2%, whatever, until it starts to get painful. And then you figure out how to cut costs, and then you transfer more money, and then you increase the percentage until it gets painful, and then you find a way to cut costs, and then you do it again. You can do it that way. It's not full out implementation, but if you need to start reserving money because you got to pay somebody to get your books right, it's one way to start. But we do this profit assessment. We get our current allocation percentages. We then say, what are our TAPs, our target allocation percentages? So where are we at today, and where do we want to be tomorrow? Mm-hmm. And then we create a roadmap of each quarter. What are we going to adjust for our allocation percentages, right? We're at 10% profit. We're at 0% profit. We want to get to 10%, maybe 20% profit. How do we adjust all these different expense accounts to reallocate? You only have 100 points, right? How do we reallocate those numbers to get to that goal amount? What is a realistic way to do it? Usually in the beginning, we can go in, we can dig into your spending and say, oh my God, look at all these excess expenses, right? How many duplicative softwares do we all have? How many subscriptions do we have that we don't use? We cut all those out right away. Usually the first swipe is a nice big jump. Mm-hmm. And then from there, we got to work on other things, right? Sometimes it's, hey, how do we be more efficient, right? That same individual in person producing more. How do we get more margin off of what we're selling? And how do we get more creative? Or maybe, hey, we just need to grow in revenue, right? We've cut all the expenses possible. We're at that point. Okay, now it is time for increasing revenue. And maybe even sometimes we need to drop our percentages in some areas to allocate a marketing fund, right? Maybe we have our marketing fund, our growth fund account, so we can continue to grow the business that way.
Sounds like a lot of steps in this.
There are a lot of steps in implementing Profit First. You read the book, you hear the concept, you hear the envelope method, you're like, I can do this.
Well, if that is the case, then then they should really check it out and try to move forward with it. I think
Absolutely.
that's a very good kind of introduction to Profit First. If anyone is interested in more, we may produce more episodes about it. We'll see. Reach out to us. You guys have our email. It's at the end of this, the end of the podcast. Eric, is there anything else you want to add about Profit First?
It sounds easy, but it's harder than you think. We even struggle with some of the things that we run into inside of our own firm in running this program. So reach out. Happy to answer questions and hope to hear from you.
Perfect. Thank you. You've been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you heard, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.